Good Thursday morning, Market Chameleons, and everyone joining us for the first time. Thanks for coming by and checking out the Market Chameleon pre-market show. Before we get started, please take a look at the shared screen and the disclaimer and realize that Market Chameleon, Dimitri, or myself are not registered investment advisors or a broker dealer. If you're searching for investment advice, please reach out to a registered professional. This show is for informational purposes only concerning Market Chameleon tools and products. With that, here we go, Dimitri.
Yep. Good morning, everyone. And I'm going to share my screen. And a quick note, anyone join us for the first time, Will and I, we do these shows in the morning to try to help answer questions you may have about the Market Chameleon tools, the data, or the analytics. And if you do have a question, type it into the live chat on YouTube. Will's keeping an eye on it, and he'll let me know. Read it back to me. We're going to try to answer as many questions as we can. And to give you a couple minutes to type in those questions, we're going to take a look at our pre-market report, see if we could get insights, what's going on in pre-market trading, and then we'll move on to our questions. So let's start out taking a look here at our pre-market report. And up top, as you could see here, you have this calendar view that goes back 1 week. And it shows a summary of what happened in the pre-market hours on those particular dates. And this just helps you compare today's activity to what's been happening in most recent history. So you could just kind of scan it with your eyes and eyeball and see if there's any potential trends or something unusual. If you click on that date, and it'll show you the pre-market trading on that date. So we're going to start out here, April 18th. That's today. And so far, we see 479 stocks trading higher, 292 stocks trading lower in the pre-market. We have 169 million shares trading on up volume, 62 million on down volume. And if we convert that volume to dollar value, we have $2.7 billion worth of stock trading higher, $1.4 billion worth of stock trading lower. So based on that, it appears that so far the traders in the pre-market have a positive lean or more bullish lean. Let's take a look at it from a couple more perspectives, and then we will move on to our questions. So I'm going to scroll down here, and now we get this more granular view. We see stock symbols, price changes, volume, alerts for stocks trading in the pre-market. We see our most active stocks, a list of our biggest percentage gainers and biggest percentage decliners. And here we see 66 stocks made it onto our biggest percentage gainers list, 43 on our biggest decliners list. So that also points to a more bullish lean or bullish bias in the pre-market trading. Now, to make this list, we do set thresholds because stocks in the pre-market trade with less volume, less liquidity, and so forth. So we do set thresholds to make it onto this list. But that will include any stock. It could include small cap stocks. So you see here the market cap. Some of them are very small cap stocks, even below 10 million. It could be an ETF. It could be an inverse ETF, a leverage product, a closed-end fund. So to narrow down this group, we could use the filters above, right? So let's look at these filters here. If you have a watch list and you want to filter by the stocks that you're tracking in your watch list, you could do that. We're going to use this in ETF filter. I'm going to click on it, and you see there are different ETFs to select from. Let's choose this one, the first one, SPY, and we'll click on it. What this filter does is filter the stocks that are holdings in the SPY ETF. So what we did was narrow down our pre-market scan for S&P 500 companies, right? SPY is the S&P 500 ETF, and these are the S&P 500 companies. And now we could see that there are 11 stocks that made our largest percentage gainers list. There are 10 in our largest decliners list. And this is a mixed bag, right? Pretty even. So not, not showing a strong bullish or bearish bias. So we looked at it a couple different perspectives, and I would say, so far trading pre-market hours, probably somewhere between mixed to slightly bullish as far as the trading activity goes. So we gave it a couple minutes. If you have questions, I'll take them now. If not, we had a leftover question yesterday.
Yeah, I think Rob's leftover question about Netflix was the only thing we had outstanding.
Okay, so let's do that. We're gonna go to Netflix, and the question was, Netflix is coming out with earnings today after the market close. So maybe we could take a look at Netflix market's historical earnings and see if we could get some insights regarding that. So April 18th over here, that's today, Netflix will be reporting after the market closes, right? So you have all day of trading today, and then once the trading, at the end of the day, it closes, and Netflix, whatever, reports at like 4:30, I guess. Actually, we could check that. Let's see. So, yeah, so see, after market close, and they're going to have a conference call at 4:45. So usually right after they release it, then they'll have a conference call. So you could see here that this is going to be today after market close. So let's first take a look at some historical numbers here. I'm going to look at these interactive charts. And what we want to do here is we're going to look at these numbers, and we're going to get an idea, what are the options usually do? What does the stock usually do? And start building ourselves a map or visual model of averages, potential ranges, so we have an idea around the trading activity, what usually happens in Netflix. Okay, so up top here we see that historically, if we used all our observations, that the option straddle implied a move of 9.1%. Okay, so that's by the end of the day, right before the market closed, and right before Netflix reported earnings, the straddle tended to close with a 9.1% anticipated move in either direction. So let's just click on that, take a look at that. So here are all the implied move straddles, right? These are in the gray. Right now we're over here. So as of yesterday's close, I'm hovering over that the straddle is implying 8.6%. Okay, this is from yesterday, and we don't know what today's trading will be or what it will be by the end of the day, but now we're painting ourselves a picture of potential outcomes by the end of the day. Where can the straddle go out? Right, so the median is 8.6, and if we look at the high range of 15.6, low range 5.8, average 9.1, median 8.6, which we're right here right now, 8.6. And we could narrow down a little bit, like let's say if we're just looking at first quarter, because the Netflix is about to report their first quarter earnings, we could take a look at if it changes. And here we see, on average 9.3, a little bit higher, median price 8.8 with high-low range. So with the days to go, right, with an entire day of trading, we kind of have a picture of potentially where this straddle may close, right? So we go monitor all day, if you're looking maybe that it's too low and you think that it'll have a run up to the end of the day, it's too high, maybe it'll come back in. But the idea there is now we have some kind of benchmarks for ourselves, right? Of how, how this straddle may, run up to by the end of the day. All right. So it's not, you could see it varies. It's not always 9.3%. Right. This is the average line. So it's not always 9.3. The median is 8.8, which is we're a little bit below that right now. But it does, there's some variability, there's risk, but the idea is that, it's not going to, it shouldn't collapse to zero because we have earnings, right? So you have some already underneath a bid there somewhere. And now, we get that type of a benchmark. And a lot of people, that's what, that might be the strategy. They don't care about the actual earnings. They close out at the end of the day. So we get that, visual for ourselves so far. Remember, we're just right now just gathering information, building ourselves a visual just to be prepared for the day. Let's come back to the summary. What about the actual move? Like, what does Netflix actually on average move after earnings? So closes, and then it reports, earnings, and then trades the entire day. So from close to close, from the previous day's close, when right before it open, before it reports earnings, then it reports earnings with the next day's close. What is the actual move up or down? So that's over here, 10%. That's the average for the first quarter. Let me unfilter that. I had the filter up. So the average 9.7 if we counted all of the quarters. So we could click on that and we see the data here. Now we see, this is the average 9.7, high move 35%. There's an unchanged, basically, median move 8.3. And then we could see that the reds represent a down move, greens represent an up move. So all the bars are pointing, going up because this is the magnitude of the move, but green represents up, red down. So even here, a visual, we could see that, that it had more down moves than up moves, but they're close, 44% versus 56. It had, a up move. These are simple averages here. These are absolutes. The biggest up move, 19%, biggest down move, 35%. And the median move, negative 1.6. If we wanted to look at it just for the first quarter, we could do that and see if it changes things. So here, the first quarter actually, tended to be weaker than the rest of the data. Right, so you could see on average it was down negative 3.1%. You could see the big up move and down move. There's bigger down move, 35. So we don't know if that will translate to this quarter, but we could definitely see from the data that historically, first quarter was weaker than the combined data. 40. You could see here, right? 44%, 56, and so forth. So this gives us an idea of how the stock actually moved. Do you remember the other one? We were just looking at what the option straddle tended to be priced right before the report was released. Now we're looking at what did the stock actually do after full days of trading. So we could see the moves, how the big moves to the upside, downside, the range, the averages, the median. So we have now an idea of how the stock did versus how the options anticipated the move. All right, so let's come back here to the summary and just continue going through the data. So what does this tell us over here? Just comparing 9.1%, 9.7, that if we took all that data, the stock on average exceeded the move that was anticipated by the options, right? There was a 0.6% differential, meaning that on average, the options underpriced that move. Now, it could be because of an outlier. We're going to check that, but it could be because of one big outlier. But if you looking at all the averages, then the stock move, right, exceeded what the options were applying. Let's check that for the first quarter. So first quarter, same thing, 9.3% versus 10%. Okay. So what about the move right at the open? And this here, opening gap, is a little bit different. This measures the immediate move where the stock closed, reported earnings, and then it opened at a new price, right? So that's the initial gap, the immediate move, not waiting till the end of the day, but like right in the morning. And we do this, and we take the first minute's VWAP, because you do get a chance at that moment to start hedging, right? So once the market's open, you could start hedging positions. The stock's open for trading after 9:30. The options should be opening up, so you could start trading. So what does that move look like? The initial gap, because you could have a small gap move and then the stock just moves the rest of the day a lot, or you could have a really big gap move and it closes in, or you could have a big gap move and doesn't do anything. So that the question is, okay, what about at the open? That initial move right after earnings, and that tended to be 8.8% on average. So we could see here right away, just comparing these two, that yes, the opening gap move was really pretty large, 8.8%, but that the stock must have tended to continue on. It didn't close the gap, right? Because then we would see the earnings move smaller. It continued to, when it increased, it continued to potentially increase, and when it decreased, it continued to potentially decrease, adding to the move. So as the day went on, the actual move got greater. All right, look, we could take a look at the opening gaps. So here are the gaps. So this is right in the morning, and we see the average 8.8%, max move 29, seen unchanged, median move 7.7. These are the data in the graph. These are the simple averages, so an average 0.7 up. This is the biggest up move, biggest down move, median move, and then it was split, up and down almost equal. We could take a look at the first quarter. So the first quarter, you see that the gap move was a little bit lower, 7.8%. So if we took all the data, first quarter, we were looking at 7.8% average move up or down versus, I think, 8.8% if we looked at all the quarters. Here's the max move, median move 7.4, average move negative 2.1, meaning You know, the down moves exceeded the up moves. Here's max up, max down, medium move, 50-50 up and down. So we could see here that the straddle right now, I'm hovering over it. So the straddle as of yesterday was 8.6%. Well, how's that relative to the average opening gap, right? Because we're looking at relative values at this point. How is the market's value, which is saying the straddle is 8.6% right now priced? We still have a day to go. Well, how does that look relative to what the stock actually moves up or down, on that initial gap? 7.8%. So we're above that, right? We're above that, a little bit above that. So let's go back and continue looking through the data. This is the biggest moves. Okay, sorry. So this here is the biggest move to the high and to the low. Right? And we looked at it. So we're looking at how Netflix could potentially move, right? Well, we looked at it from the close to close. How much can it move? From after a full day of trading, how much did it move to the end of the day? We also looked at it from the previous day to right at the open. How much can it move just right at the gap? But then, so we looked at those two, but the stock still trades in between, right? So if it opens at 9:30, we looked at that. It closes, but it also trades between 9:30 and 4, meaning it could be very volatile, be in between them. So this measures, well, what is the percentage move to the very high of the day from the previous day's close and to the very low of the day, right? That's what this is looking at. And if we looked at to the high of the day, okay, the average move was 11.7%, with the best move 20, worst 0.1, medium move 11.6. So when it was up, the average, at any point of the day, the high was 11.7%. What about to the downside? What is the average move to the very low? Remember, we're looking at the low points. Well, that was negative 10%. With the best 0.8, worst 39%, median 7.6. So now we're getting kind of another range, and this is intraday. Right? We looked at opening gap, we looked at end of day. Now we're looking at intraday. How could move, and now we have the data in front of us, and we could see how that looks like. And if we want to do first quarter, let's take a look at the first quarter. Does that change? So that changes a little bit. The average to the high was 8.3%. The average to the low was 11.1%. Right. So we're looking at the extreme move of the day. All right. So let's continue looking at the rest of the data. So I'm going to unfilter the first quarter, come back here. So here we get the max to high, max to low 39%. So this is really, that's what these were. But this is the same report. It just shows us the max, what are the max move if we included the intraday. Okay. And then finally, well, how did the straddle do on average? Like, what was the straddle? If we took the option straddle right at the end of the day, and then we looked at that same straddle this next day following earnings. Well, what was the performance? Did it tend to, increase in value, decrease in value, and by how much? Well, here it's telling us the average is positive 12.4%. That's looking at all the data. And that's not surprising because we could see that the straddle here, 9.1%, tended to be underpriced relative to the actual move of 9.7. Right. So if the straddle tended to be underpriced, then from a long perspective, it should, on average, have gained value. Right. It was priced too low. So let's take a look at that. So 12.4% over here. And this shows that, this is the average of all the data. We see that there's a straddle here. The best one made 234%. Well, how's that happen? Well, if you buy a straddle, right, you could really make unlimited because there's no cap to when you buy it. So it could double, it could triple, it could quadruple. It depends on how much the stock moves. If the straddle's priced 10% and the stock increases 30%, well, it's a triple. So the best return on the straddle was 234% in our observations. The worst was down 76%. So when you're buying a straddle, the worst it could go to zero, you lose 100%. So far we clocked the worst at 76%. You lost 3/4 of the value of the straddle the next day. The median move was negative 3.1%. So why are these different? So this average gets pulled up, right, by the extreme moves to the upside, right? So averages, that's how they work. They, if you have outliers or whatever, they'll tend to move the averages up. So you could see here that right in the middle, if we split half the observations, the median moves negative 3.1%. The average is positive. And here we could see that because there's more negative. The straddle had more often they lost than they gained, right? 46% of the time they were up, 54% of the time they were down. So just so you're not confused, keep in mind that the returns are different, right? When it's up, it doesn't mean that it's up exactly the same amount that when it's down. It doesn't mean when it's up, you make 100%. When it's down, you lose 100%. Because on the upside, you could make 200%, like over here, right? So even though the frequency of moves to the downside were greater, the magnitude of the moves of the upside, when we averaged it all out, on average, they're positive. And you could see here, like some of these really big moves, which tended to be to the upside, by the way. Like these are straddles that gain, but the ones that gain, the stock tended to be up. Right? These big outlier moves, the stock was up a lot. What if we did the first quarter? So let's go to the first quarter. In the first quarter, the averages were still up, but you could see the median move as well, much lower, down 18% with a 50-50, up and down. So we really quickly now we painted ourselves a picture of, potential stock moves, potential straddle values by the end of the day, the next day. So now, you could start modeling out, where things moving around today, getting those, comparisons, like relative values. We're right up at 9:30, Will, so I'm going to stop right there. Oh, you're on mute.
Oh, sorry, D. Maybe we'll look at Netflix after the earnings tomorrow. See how kind of things change.
Cool.
Okay. Awesome job, buddy.
All right. Thanks everyone for joining. Stay safe out there. Have a great trading day and hope to see you guys tomorrow.
Trade in peace, chameleons. Everyone have a great day. Thanks again, D. Bye.
Bye.